Hi everybody, welcome to another update on the stock screener. Today I'm going to talk about Cavvy Energy, and as you know, maybe you recognize this company. This company was called CVI Energy, and I talked a lot about it when it was somewhere here, and then it crashed, but now it seems like it's rising again. So I am taking a look and looks actually pretty good. So let's talk about it. This is the production and costs chart. So you can see production has been dropping. It went up tiny bit last quarter, but it's probably going to stay around this level. Maybe in the future they can do more capex and then bring the production back up. But yeah. On the other hand, the cost has dropped a lot in Q2, so that's good. So they are managing the costs. 17 operating costs per BOE in CID, and this is the production. If you do this times 365 days, you get about 8 million? 8 million BOEs per year. Okay. Let's say 8.7 and then maybe a bit less, and I'm keeping it at 8 million. Normally this could go back up. If they drill more wells, this should be able to go up. But to be conservative, I'm taking 8. We all know that this is a long life asset, 25 years of reserves. So this is going to produce until 2048. And latest balance sheet doesn't look that great. 89 million in current assets, but a lot of liabilities, AROs, 400 million. About 150 million in debt and 100 million payables. But the good thing is, and nobody has seen this yet, their sulfur hedges are coming off in 2026. That's in 4 months from now. Okay, in 4 months from now, they will get 100% of the sulfur. And as you know, sulfur has gone up. So that's the yellow line is the sulfur price is going back up. It's at 366 now. That's the China price. But the West Coast sulfur price is at 252, as you can see here. About 70% lower than the China price. Okay, so take that into account. We are going to use this price. So let's say 270, it's a bit higher now. So that's in US dollars, as you can see here. And CID, that's $370 per ton. Okay, we are going to use 370 for the sulfur, and I've already put it in here. So this is the normal business natural gas using the revenues, etc. Per BOE, which is actually this number 22.7 is what I got without hedges. And this is the natural gas price that was realized without hedges. And this is the current ICO price, 1.7. I think this is going to go to 2 next year, a little bit higher, hoping that it goes up next year, of course. You can see that the forward curve is going up for next year. So yeah, that's the revenue per BOE that they will get. Next year is 26, I think. Okay. There's not a lot of sulfur revenue in this, so What we are going to do is add the sulfur revenue here. So 573, that's this price, 371, minus 570, because there's some transportation marketing, that's about $50 CID. So minus 50. So we already have 366 dollars per ton China price, minus 30% to get the West Coast sulfur price, and then another minus $45 CID to get the price that they will get. Okay, so this is the price that they will get. This is the tons. I think they are currently at 1,200 tons per day in sulfur production. So that's this number times 365 days. So this is the extra revenue that they will get. This was without the revenue that they get. So it's about 150 million more revenue. As you can see here, 150 more revenue if also the price of ICO goes up a bit. If it doesn't go up 1.7, then it's about 100 million revenue more. Okay, about 100 million more revenue. That's quite a lot. That's quite a lot. If sulfur keeps on going, let's say it goes up another $100, that's possible. This trend is rising. So if this goes up another 140, because it's in CAD, plus 140, look at this. This is amazing. 457. So it was 396. If it goes up another $100, the sulfur, 457. So that's another 50 million extra. You can see that's already changing the NPV chart. Amazing, right? You can also see the upside here. The upside, you know my formula. That's the NPV, this number, minus enterprise value, so this number here, divided by market cap, which is this number. That's the formula, the universal formula for upsides. So if we add another $140 to this, which is possible, because this could keep on rising another $100, then you get an upside of 4 bagger. 4 bagger, currently 2 bagger. So it all depends on the sulfur price, apparently. This is a pretty big part of revenue for pure date energy. 200 for the natural gas and oil, and it could be another 200 million for sulfur. Okay, if you find something wrong with this calculation, tell me, but sulfur is going to be the same amount of revenue as the oil and gas business. Okay, so costs are just the all-in sustaining cost here, 19, which is basically 17 plus transportation. Okay, so this is the latest quarter. 17 plus transportation, royalties about 10% of revenue, already deducted this here. So I even took 15% royalty. Then we have the costs, 19, okay, operating plus transportation, and SG&A is added here, 20 million SG&A per year, and capex is 30 million for this year. Next year they need to do maintenance probably, so 50 million, I think. And then, yeah, this is just SG&A. Okay. And then we go back to, let's say, 60 million capex per year to keep this production going. Could go up, probably more upside. And I took ICO going to 2. Okay. Of course, oil needs to go up as well. I'm not that bullish on oil, so maybe we are not going to get to the 2.7, but yeah, 2 should be doable because the ICO is futures curve is going up. Yeah, so let's use this number 2, and only sustaining cost is 19. Revenue is 22.7, which is this one plus this other revenue, so about 22. Sometimes it's a bit lower here, so 3.64. Let's say 22. So that's the number that I have here, 22, and then divided by the realized price that they got in Q2 and times the natural gas price that I think that we will get, and that's 2. So understand what I'm getting at here. So we have revenue from the gas plus the sulfur. The costs are just the all-in sustaining costs times the production, right? That's the cost. Revenue minus costs minus capex and SG&A. Minus interest, because there is some interest to be paid. And actually, if they can get 80 million per year in profit, by the way, they don't need to pay taxes for at least 6 years because they have 600 million in tax pools. So that's also going to help. So they can actually pay off their debts in about 3 years with this cash flow, 100, 200, 300 million. Yeah, they only had 150 million debt. And I'm not kidding, because look at this, 130 million debt. Okay, this is decommissioning obligations. You need to add that as well. But this is the debt. I think the interest could actually drop to 0 in about 4 years. So that's how I'm calculating the interest here. Okay. Is this clear? I think this is clear. So the PE ratio is currently 2, going to 1.5. Very cheap, and that's because they don't need to pay taxes. From here on out, it's a PE of 2 with taxes and without interest, because all the debt would be paid off. And this is only with flat production. At this sulfur price. Now let's do some sensitivity analysis. What if sulfur goes back down to, let's say, 200? Then I think they would get, let's say, $150 US dollars. Okay, so 150 US dollars. So only 200 CAD. See, you can see this would be very bad. So if sulfur drops back to here, 200, they would get maybe 70% of that. That's 150, and you can see immediately that the cash flows are very bad. So very important that the sulfur price stays at this level, and then you get this. So yeah, very difficult. I don't know what the sulfur market is going to do. Is it going to go here? Is it going to go back down? That's something that you need to watch. Because if it goes back down, then you can see what's the upside then? No upside. Actually, a downside of 200%. Okay, downside of 200% if sulfur goes back down. If sulfur keeps on going up to, let's say, another 100 higher, 370, then the upside is 4-bagger upside. If sulfur goes to here and stays here for the next 20 years. So yeah, that's something you need to speculate on. I can't help you with that. Maybe this is going to be a cycle like this and stay around 250. So maybe we should use a lower number, 200. At 200, yeah, this doesn't look that great. Minus 80%. Because it wouldn't reach the enterprise value. The cash flows wouldn't reach the enterprise value if sulfur gets back to here, just a tiny bit lower, and yeah, not good. So yeah, would I buy it or not? It depends on the ICO price and the sulfur price. It depends on that a lot. I do think that ICO will go up because LNG plants will come online, so there could be some upward pressure. So that's the $2 here. But sulfur, I have no idea what it will do. If this tops out like this and goes back down, that would be dangerous for CVI Energy. But yeah, you can see why this company has been rising, and that's because they are actually turning profitable again. As you can see here, profitable currently at a PE of 2 is what I think. PE of 2, paying off debt, so going to a PE of 1.6, 1.5, etc. Okay. So what's the conclusion? The conclusion is I still think that this is too dangerous. The danger is with the price of sulfur. So yeah, I don't want to risk it, even though there are good cash flows, but I have no idea if sulfur will keep on rising or not. It looks good right now. But yeah, upside 100%. There are much better companies with more margin, less debt, which have higher upside than 100%. So, and this is 10% discount rate, okay? 10% discount rate. Okay, so this is the analysis, and do with it what you want. But I think it's a good buy. but you need to watch the sulfur price and the natural gas price in Canada. Okay, and see you next video. Bye.